5 top penny stocks to buy now under $1. Let's take a look at the Russell 2000 Small Cap Index ETF, IWM. Even with the recent sell-off in the overall market, small cap stocks are far outpacing popular, large cap lead markets. Case in point, the Nasdaq QQQ is red on the year, and the S&P 500 SPY is only up about 3% since the start of 2021. In the same light, small caps are up over 8% year to date. So it stands to reason that smaller companies are thriving. What are the best penny stocks to buy right now? I'll leave the ultimate decision up to you, but here are 5 that can be bought for under $1 and have been trending this month. Number 5, Castor Maritime. Castor Maritime, CTRM, provides seaborne transportation for dry bulk cargo. It ships everything from coal and iron ore to grain and fertilizers. Obviously, the concern in the Suez Canal hasn't helped global shipping expansion. Some $10 billion in shipping traffic per day has been disrupted. However, Castor hasn't commented one way or another as to its own routes becoming encumbered by this incident. The company took delivery of another ship this week, the MT Wonder Sirius. Our 2 tankers are projected to generate in aggregate, assuming no off-hire days, approximately $10 million of gross revenues for the minimum scheduled period of the charters, or approximately $21 million should the charterer exercise their options to extend both charters by an additional 1-year term. These figures do not take into account any profit sharing that may apply above the minimum daily hire of $15,000, said Petros Panagiotidis, Chief Executive Officer of Castor, in this week's update. Number 4, Acasti Pharma. Acasti, ACST, is another one of the penny stocks trading for less than $1 right now. It started the year off strongly, rallying from around 34 cents to highs of $1.22. But since then, ACST has been trying to recover to no avail. One thing it has been doing well at is raising money. The company is reviewing strategic options to drive shareholder value. This has been a long and drawn-out process ever since its car pre-trials fails to meet the mark. Now, armed with cash and having engaged Oppenheimer, hopes are that Acasti can make something out of its current asset holdings. From a technical perspective, ACST stock has treaded water at a level previously shown as support. It's also right around the price where shares traded before the drop last year. Considering the gap from 2020 remains filled, and new momentum has come into the market this week, will ACST continue to see support at these levels? Number 3, Adamize Pharmaceuticals. Shares of Adamize Pharmaceuticals, ADMP, have mimicked a similar trend as ACST. The penny stock rallied strongly at the start of the year, moving from 50 cents to highs of over $2.30. Since then, it's been a clear downtrend with a few pit stops along the way. The main point of focus for traders has been on Adamize COVID treatment candidate. This month the company said that in studies conducted at Galveston National Laboratory, hamsters challenged with the virus that causes COVID-19, SARS-CoV-2, resulted in decreased inflammation in the lungs of animals treated with Tempol compared to controls. What does this mean? It demonstrated that the company's Tempol could reduce inflammation in animals given the SARS-CoV-2 virus. The next step is submitting the publication to a peer-reviewed journal. Given the focus on COVID treatment stocks recently, ADMP seems to have caught the attention of the market. Number 2, Genesis Healthcare. Genesis, Gen, has come full circle over the last few months. It started the year around 50 cents, ran above $1, and now sits back around 50 cents. The biggest reason for the drop came when the company discussed strategic restructuring and a voluntary delisting from the NYSE. The severity of the pandemic dramatically impacted patient admissions, revenues, and costs, compounding the pressures of our long-term, lease-related debt obligations, said Chief Executive Officer Robert Fish. These restructuring transactions improve the financial and operational stability of the company significantly and build on the encouraging signs we are seeing as COVID-19 case rates continue to materially decline and residents, patients, and staff are vaccinated. Is there light at the end of the tunnel? In light of the company looking for ways to restructure doesn't necessarily suggest it's throwing in the towel. But a voluntary delist did give a blow to Gen stock. However, this week the company brought on Harry Wilson as the new CEO. Wilson is also noted as a turnaround specialist, so it will be interesting to see if Gen subsequently turns around with this appointment. 1. Kelso Technologies Inc. Finally, Kelso Also Technologies Inc. KIQ rallied in kind with the market on Thursday. The stock is up over 50% year to date but still well off of its 2021 high of $1.48. It looks like the termination of one of its contracts earlier this month was cause for concern in the market. Furthermore, its earnings miss didn't necessarily help things. So is there anything to pay attention to right now with KIQ? The company develops products for equipment used in transportation. Obviously, the pandemic did a number on the industry last year. But with the reopening trade becoming more prevalent, traders are optimistic. In particular, the company supplies and designs rail tank car valve equipment for handling and containing different commodities. With rail becoming a more popular topic of conversation this month, and cheap penny stocks gaining momentum, KIQ could be one of the penny stocks to watch. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire and we'll see you in the next one.